Hello traders, today is the 26th of September 2010 and happy trading to you all. This video is about the preparation for day trading, okay? Rule number one of day trading, okay? What is the first rule that you must follow if you are preparing for day trading, okay? I can tell you right now the first rule is to make your trading decision on the higher time frame. So rule number one of day trading is trading decision must be made on the higher time frame before switching back to the lower time frame for a better entry point. That's the rule number one of day trading. Now, how do you do this in practical? Okay, if you are a new trader, I will show you here how we do that. You go to the weekly chart first. As you can see, this is the weekly chart of the Dow Jones future market. This is not a cash market. Repeat, this is not a cash market of the Dow Jones. This is the future market of the Dow Jones. The future market, December 2010 future market of Dow Jones. This is it. This is not a cash market. Very important to know the difference. Okay, so right here on this future market of Dow Jones, I draw some important trend lines here. That is the starting point of my preparation for day trading. Okay, so anytime we see two valid high levels, we draw a trend line. There's one here, another one here, so we have a valid reason to draw a trend line. That's why we have this yellow trend line here. If I show you how far it went down, 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 that's the trend line we draw going into the future, even the future, far, far, far in the future, in a far, far, far away country. Okay, so now we draw a trend line on the higher time frame, which is the weekly chart. So I draw one already here, which is the yellow line. Then I notice there is another 2 point here, this point and this point here, and then I draw another trend line here, which is the green one here, going down, down, down. I will show you. So you see into the future, it went down. As you can see, this line was drawn, okay, from this level here, which was September 2008. Okay, September 2008. This trend line is on this level here, okay, going down, and right here exactly in this level here in 2009, around July 16, 2009, this future market of Dow Jones has touched this zone here to find support and went all the way up here. This is July 2009 right there. You see how important is this green trend line is. It's still on the chart right now. And then again, we notice again another trend line here, which is this point here, and this one here, which is this blue trend line here going down. We cannot see it properly here. You just know this blue line is another trend line here. Okay, and then we have the pink one here. This point here in March 2008. Okay, all the way here, this level here. Also, I think it's July here. Again, this point here, all we need is these 2 points, this point here and this point here. And then we have another trend line here going up, which is the pink one going up, all drawn in the on the weekly chart. Okay, so this is about the first rule of day trading. Okay, so we have all our trend line drawn now. Okay, we notice that this pink one here has been a very strong resistance level for this Dow Jones future market here. As you can see, the price ride around this pink line only to touch it a bit and return back down. Now I have two another trend line here, which is the red one here and this one here. These red trend line were drawn on the monthly chart, so we have to switch back to the monthly chart. So we draw our trend line on the weekly chart, which is this green one, this blue one, this yellow one, this pink one, also drawn on the weekly chart. So it's looking very beautiful now, like a rainbow here. So we go back to this is the monthly chart now. Now we're going to draw a trend line on the monthly chart. As you can see, there was this point here and then another high level here. So it gives us a valid reason to draw this trend line here. Okay, and we draw it right here. Okay, this has been this year 2010 in April right there. The price touch it, you see this trend line here, and the price went down. So we have a valid reason to draw a trend line because you have 2 points now. So this point, draw the red one here. It's going down into the future. We'll leave it on the chart like this. Okay, in the future, the price may come back and retest those trend line here. So you leave them like this. Okay, this is extended trend line. Okay, so they just stay on the chart for you. So right now, and then we have also this low level here on the monthly chart, and this low level here, giving us 2 points again on the monthly chart here to draw again another red trend line here, flying into the future also right here. So as you can see here, the price went from the edge of this red trend line going up here. Now it touches this trend line going down, as you see. So it's at the edge of this trend line here, which is a very important level, which is a resistance level, because if the price is touching the trend line, you must pay attention and see whether it's going to cross above it or below it. So this is what we call a hotspot trading zone. Okay, we do not assume anything, we just observe the price in this zone because it's at the edge of this trend line here on the monthly chart. This point to this point, this red line is now exactly there. This future market of the Dow Jones index. Okay, very important. Now this is how we prepare for the trade. So we know that we want to trade at the hotspot zone. This zone here was a very hotspot trading zone. This here today, when the market open tomorrow, we have to observe carefully this hotspot zone of this Dow Jones. Okay, it's at a hotspot zone. If you watch carefully here, also on this monthly chart, this horizontal line here, I will try to color it now. Which color I haven't used so far? I will color it white. Okay, and then I will make it a bigger size also. Okay, so the white line is also a resistance level here. As you can see, the price touches this level here, and then it came back here. It went up above it, came back to retest it right here. Was a resistance level here. The price touches here, went down, went above it, come back and retest it. So this white horizontal line is also resistance level, which is exactly where this Dow Jones index is right now. The white horizontal line plus this falling trend line here also. So we are this hotspot zone again. We will watch. It does not mean that the Dow Jones will come down. It can go up, it can come down, it can go horizontal. It's three things it can do here. So all we do, we keep our eyes wide open, watching this Dow Jones index. Okay, this is about the preparation for a day trading. The rule number one, starting from the higher time frame, to locate a point of interest. Okay, you do not want to trade anywhere, you do not want to trade any day, you want to trade where you are likely to be rewarded. And right here we have a very hot spot zone, what we call a very hot spot zone here, right here. This trend line going down, okay, this point and this point trend line, this red line going down. Okay, the horizontal line, which is a resistance level here, is exactly there. Okay, also we know that this green, this pink trend line is from the daily chart, so it's squeezed between this monthly trend line and this pink one, which is from the weekly. This is from the monthly. The red one is from the monthly, and the pink one is from the weekly chart. It's squeezed between these two, and the monthly also. So it's squeezed between three lines here. This one going down, this one going up, and this weekly one here is squeezed in this zone here. Okay, this is what I'm talking about. You want to trade and locate from the higher time frame the high spot zone, because I see people come into the market and trade anywhere anyhow. The question is it a very important level? Is it a hot spot zone? Is it a point of interest? Is it a point where a professional trader will be willing to trade in? Okay, is it because last time we have this bullish candle here? Why? Because the market is trying to retest the edge of this trend line. That's the only reason why last Friday the market was just going up, going up, going up, going up. Because anytime you see the market going up or going down too long, we have a very strong bullish day or a very strong bearish day. Check on your chart why the market was just going in one particular direction. In most cases, the market is seeking one particular price level. Okay, just to quickly check my time with you too. Okay, so the market was seeking to test this red trend line on a monthly chart and this horizontal white line on the monthly chart, which is the crossroad of this point here. And also, if you look carefully here, the price is between the Fibonacci retracement level 61.8 and 50% Fibonacci retracement level. So for the movement, those who were bearish from here all the way down here, the price retraced back all the way to 61.8, came back down to the 38%, now is returning back up. The chances that the best place to sell, the price may continue. My view is that the price is likely to find a bit of resistance, and then you may have one day down, and then continue movement outside to 78% Fibonacci retracement level that remains to be seen, which is at the edge of this pink one here. Okay, so direction to the pink one here, but you may experience some resistance. So till next time, enjoy yourself and be very happy.